Hi, good afternoon, everyone, and welcome to our 2018 Tax Hiring Outlook webinar. My name is Stephanie Gilmartin, and I'm a Director of Executive Recruiting here at TaxSearch. I'm going to be your host for today's webinar. We also have a few other tax staffing experts that are going to help us today. From TaxSearch, we are going to hear from Adam Golden, Peggy Cross, and Natalie Santiago. And then from our TaxForce and TaxJobs side, we're going to hear from Gareth Davies, Rebecca Bison, and April Stafford. So in today's webinar, we want to cover our top 5 key takeaways from this year's Outlook. So I'm going to cover those and go over each one just specifically, and then our participants are going to kind of shed some light on those areas. The first one is a reduced use of internal HR departments. We've seen that quite a bit this year. Second, increase in using outside advisors. Our third key takeaway is giving some reasons for hiring for this year. Fourth, the challenges in hiring for new open tax positions. And then the fifth one is talking about tax department headcount, both increases, decreases by functional areas. So during the webinar, you are going to have the ability to chat in your questions. So please feel free to ask any questions, as many questions as you'd like, and we will do our best to answer all of those. We're going to wait until the end to answer them. So if there's a slide that's up and you think of a question, go ahead and chat that in, and I promise you we won't forget you. We'll do that at the very end of the webinar. So let's get started. April Stafford with our TaxJobs division is going to cover our first key takeaway for us. So April, go ahead, the floor is yours.
Thanks, Stephanie. So I think all 3 areas of decline we see on this chart play a part in the increase of use of firms to fill tax jobs, especially the 10% increase in the use of contingency firms. We believe there are several reasons for this. First, being driven by supply and demand. For example, the most in-demand tax candidate profiles that I see on a daily basis are at about that 2 to 8 years of experience in compliance and tax accounting. Natalie Santiago is going to go into a little more detail with us about overall tax skill sets later in the webinar. But because we're in this candidate-driven market, it makes it even more competitive to fill roles at this level with traditional job board postings. As well, there typically isn't a strong enough budget to engage a retained search firm for these lower to mid-tier level roles. Therefore, that's why we're seeing the increased dependency on contingency recruiting. I also want to mention another reason employers leverage firms is because of the strong competition for top talent and the need to tap into those candidate relationships that some firms can bring to the table. Now, as far as the decrease in relying on job board postings, that's not a surprise to me at all because they just don't work for many reasons that involve the very limited ability to attract and engage targeted candidates. So firstly, job boards limit you to about 20% of the potential candidate pool that's actively looking, and you're missing out on the other 80% or so that would consider the right opportunity, but are currently employed and not out searching on the job boards. Secondly, all general job boards lack the ability to target very specific skill sets, and that's why you see more customized niche job boards, where serious candidates can search, for example, in the IT tech, healthcare, and engineering industries, as well as tax. Another hindrance to job boards is that the online application process has brought a growing lack of confidence on the candidate side that their resume is even getting reviewed by an actual person, which is probably accurate because most ATS systems use algorithms to search for skills and keywords, and then HR only review the top matches. And along with this, there's a huge applicant drop-off rate with these tedious online application processes, and most likely those passive candidates won't even begin or consider the process without knowing a little bit more about the job. Job boards have also made it extremely easy to click and apply. So while you may get that average 150 resumes to one hire, from a traditional job posting, very, very few of those applicants are actually going to have the skill set you're looking for. And regarding the decrease in the use of HR staff, I think sheer volume may play a part, and the fact that tax roles are very niche. Many HR groups may not have enough manpower or specific tax knowledge to effectively market, source, and recruit for tax. HR is also usually the one who manages the intern recruiting process and attends the career fairs, etc. So I think that may be why we're seeing the downturn there from what we saw, just 2 years ago. Back to you, Stephanie.
Thanks, April. Appreciate that. So next, Rebecca Bison with TaxForce is going to go into a little bit more detail on our second key takeaway. Becca?
Thanks, Steph. So when it comes to the use of outside consultants, you can see by looking at the graph, the percentage of companies using Big Four professional service firms is fairly steady in 2015, 2016, and into 2017. As we go into 2018, there's a huge increase, almost double what it has been the last couple of years. And there is a number of reasons for this. One, this is a byproduct of tax reform legislation. This data reflects tax leadership's recognition that outside support from consulting firms is crucial. Since the implications of tax reform are still unclear, many companies have held off hiring permanently to see if the increase in work will only happen this year or if it's going to cause an increase in workload every year. And while they wait, they're using outside firms to help hold them over. Due to the political timing with the mid-year election, the likelihood that tax reform implications become any more clear in the immediate future is really slim. So secondly, there's been such a push and a lot of hype around AI and technology and improving efficiencies in departments that companies are reaching out to firms to get that expertise or to use them for the software options they offer. Most companies are restricted either due to in-house knowledge and expertise or because they don't have the budget they need to buy those softwares. In addition, companies are leaning heavily on these outside resources because hiring quality tax talent is continuing to prove difficult. So Natalie will touch on this with us later, but 94% of respondents expect it to continue to be challenging to hire, and because of this, positions are staying open for several months. Companies are, again, reaching to these outside firms to help bridge those gaps and fill the void until positions are filled. The last item that I want to touch on in this scenario is what we've seen with GE and PwC, which we're still continuing to watch unfold. But companies are getting hammered by firms to follow suit and outsource their functions. Although there are some big companies outside of GE that have decided to go this direction, like Berkshire Hathaway and AIG, this isn't something we see working long term. Of course, there will be some outliers where this model, for various reasons, makes sense in the short term, but it isn't a model that will work for companies that have a management team that want to have a best-in-class tax function. Our leadership team here at TaxSearch and TaxTalent is putting together a white paper that will be coming out next month that will talk through the history of this model, the motivation behind it, as well as probable outcomes. And we'll be sure to send this article out to everyone who registered for this webinar once it's released, so be on the lookout for that. And with that, Steph, I'll give it back to you.
Thanks, Becca. So our third key takeaway is talking about kind of reasons for hiring, and Peggy Cross with TaxSearch is going to explain a little bit more of that. So go ahead, Peggy.
Thank you, Steph. The biggest reasons for hiring this year are company growth and new positions, along with department reorganization. As indicated on the slide, company growth and new positions continue to be the top reasons departments have new openings. According to the data, there was a significant increase to 83% for this year, which was up from 71% last year. We believe that drop to 71% last year was due to tax reform and the uncertainty surrounding it, which caused companies to go into a holding pattern. The chart also reflects in 2016, we had an 83% of hiring due to the company growth and new positions. This further solidifies the dip we saw in 2017, was due to tax reform, and we are still functioning in good economic conditions. We have also seen an increase in department reorganizations, causing the need for new headcount. There is a layer of tax reform present here also. Now that companies know the impacts of tax reform, they are more comfortable doing other things such as reorgs and additional plan changes to the organization. Now let's couple that with the fact we are seeing companies also change by way of spinoffs and M&A activity. While the chart shown here may reflect a decrease in those areas, we believe those decisions may not have been known at the time of the survey, causing the data not to reflect what's currently going on in the market. We are seeing an uptick in positions due to reorgs as indicated in the graph, but we are also seeing positions surface due to M&A and spin activity. That wraps up the top reasons for the hiring this year. Steph, I'll send it back over to you.
Thanks, Peggy. Okay, so Natalie Santiago from TaxSearch is going to go into more detail on our fourth key takeaway, just kind of discussing some of the challenges in hiring for new open tax positions this year. Natalie?
Thanks, Stephanie. Yeah, we had a very large number of respondents. In fact, actually 94% of respondents in this year's report said that they anticipate it's going to be challenging to hire for new positions this upcoming year. And this has actually been fairly consistent in recent years. In fact, for the last 5 years, only about 4 to 6% of respondents thought it'd be easy to hire in this kind of market. And this is due to a number of factors, one of which is the fact that the demand for corporate in-house professionals has remained relatively steady in recent years. So employers who are looking to hire, it's essential that you move quickly when you do find strong candidates for open roles, as well as to ensure that any packages that you're offering are competitive in the market, since there's going to be a lot more competition in the market for these strong candidates. And this is particularly relevant for higher level roles. We're starting to see a shift in the market here as more employers plan on staffing at higher level positions and a little bit less at the entry level. This is due to the fact that there has been an increase in the number of open positions, the mid-manager level and above. Additionally, diversity candidates are going to be even more difficult to find in this kind of competitive market. 83% of departments rated the importance of increasing diversity as either important or very important. And this has actually been a 10% increase since last year alone. So it's essential to prepare for a challenging market when you are looking to hire diversity candidates here as well. Back to you, Steph.
Okay, so lastly, I'm actually going to cover our last key takeaway, which is going to discuss the department headcount and the demand for different functional tax areas. So the first one that I want to bring attention to is the tax accounting and compliance roles. Those were the only functional areas that increased for 2018. There's a couple of reasons we think this happened. Number one, the tax accounting and compliance kind of tax operations area continues to trend upwards and has for the last 3 years. For 2018, we think the uncertainties of tax reform certainly played a big role in the demand for these positions. Not people didn't really know what they were going to need, so they went ahead and budgeted for those. The second one was we feel like companies are still not comfortable with their current in-house tax operations functions. They haven't been in as good a shape as they should. So, for many years, I think the tax accounting and compliance areas were neglected, and they've been in much need of improvement. So it's kind of finally coming to a head. We're seeing many more companies put resources into those areas, and they're upgrading their processes, their procedures, their software, their technology. Now, on the flip side of that, as Becca discussed the outsourcing, the GE model earlier, if a company decides that they're going to go with that outsourcing model, and it seems to be somewhat of a trend, as Becca said. These positions will most likely stabilize and possibly could even decrease next year. The second area I want to bring up is tax technology. It's kind of been a big buzzword. While tax technology roles have decreased to 6% from 10% in 2017, it's important to note that there was a very large, kind of a double increase from 2016. This could also be a result of tax reform, companies needing to finalize their budgets prior to understanding what the implications of tax reform would be. On the flip side, as far as outsourcing goes, if companies choose not to outsource their departments, we would expect the tax technology positions to increase as they try to leverage technologies such as robotics and automation to make their departments become more cost effective. The last area is research and planning. While this percentage remains steady at 16%, there was a significant relative decrease of 180% from 2016 to 2017, primarily due to the bigger demand on the tax accounting compliance positions. We kind of think that once companies get their tax accounting compliance areas more in line and feel comfortable with that, we might see the shift move back to hiring more on the research and planning side. So this concludes the discussion part of the specific key takeaways for this year's report. We're going to move into the Q&A portion. Gareth Davies and Adam Golden are going to help us facilitate the questions. It's not too late to chat in any questions that you have, so feel free to do that. We'll try to get to most of them or all of them if we can. So Adam and Gareth, go ahead, take it away.
Yeah, thanks, Stephanie. I appreciate that. That's a lot of really good data there. We have had one question come in. You guys, please keep submitting any questions that you do have, and we'll try to get to all of them here. The first one we got from Bruce, and his question is: given the growth in hiring that's taking place, why is it more difficult for older, experienced applicants to find a job? That's actually a really good question. It's something that I get hit with quite a bit when I'm talking to candidates, and I think there's a couple of things happening. I will say we are seeing a trend now where companies are being more open to considering more experienced candidates. I think as we start to see more and more of the baby boomers retire, which are certainly happening in this market, you're going to see companies looking around and seeing that some of the staff below the boomers just aren't ready to step into those positions and may look at more experienced candidates as bridge options to some of the younger staff. I wouldn't say that everybody is embracing that model just yet. So I think part of the headwinds you could feel, Bruce, if you're one of those people in that category that's more experienced and having a hard time is, while some companies are getting on board with that and are being creative and looking at more experienced candidates in that area, some companies aren't necessarily open to doing that, and they still are looking for candidates that may have longer runways within an organization. The other thing that I think that happens when you become more experienced is, if you think about what I call the pyramid effect, is the higher up you move in an organization, the fewer positions there are. So there's typically a lot more staff level positions in an organization than there are manager positions, more manager positions than directors, more directors and VPs and so forth. So what I typically see is, if you are more experienced, you typically have started to move up the ranks, which means your searches tend to take a little longer, and there sometimes can be a perception that the skill set isn't as in demand. But the reality is, just when you were at a junior level and you were at a manager or senior analyst level, there were just more options available to you. So that would be a couple of things that I would say would be contributing factors there. Gareth, is there anything on top of that you would add that I missed?
I agree. I think the one thing that you kind of touched on, but I think we're seeing more of the last couple of years, I definitely noticed more companies kind of not wanting to go that route of kind of someone with so much experience. But I say even over the last few months, conversations I've had with people, the fact that they can maybe get someone more experienced, not just from the kind of the technical ability, but to really help mentor, develop, and kind of lead other individuals within the team is something that we're seeing hiring authorities really starting to come around to and start becoming more interested in. I can tell you on the contract side, we've seen a lot of companies asking for people that have more of that leadership experience that can come in on projects and actually help develop people that are in teams already. So while I don't think, as Adam said, everyone's on board yet, I think even in the last few months, we've seen a little bit of a shift to entertaining more of these profiles.
Yeah, I just had a conversation yesterday with the CFO who has a person retiring in a head of tax position, and they were interviewing our firm to see if we could potentially help them with the search. And one of the profiles that we pitched to the CFO was a profile of someone who would want to work another 4 to 7 years that could come in. They have a couple of junior level people that they have recently promoted to director but aren't ready for that next step. And the comment I got back from the CFO was I would absolutely entertain that profile. The problem is I need to make sure if the person really only wants to work another 4 or 5 years, it's really 4 or 5 years and not 2 or 3 years, because I don't think that would be enough time for my internal staff. So I also think when you market yourself, if you are more experienced and you're going after some positions, being very clear about your expectations for how long you want to continue to work so that there aren't any assumptions being made could also help you in the interview process or things like that. Let's see. I have several questions that have rolled in here, so you guys are doing a great job. Pamela asked, how difficult will it be for state government tax attorneys to transition to the private sector? So we've always seen, and I'll take the first stab at this, Stephanie, Gareth, and you guys can certainly chime in. We've always seen it being a little difficult for people who have come up through the government agencies that haven't transitioned into the Big Four or the law firms or things like that, to make the transition into corporate. A couple of reasons behind that are not having the kind of front end experience on the compliance or tax accounting side of the fence, or on the planning side. Traditionally, if you're at the government agencies, you tend to be on the audit side of the fence, or the regulatory side of the fence, policy making, things of that nature, and sometimes those skill sets just don't translate over as well. I will tell you on the state side of the fence specifically, and we've had a couple of questions here about indirect tax that we'll get to in a second, and some of these concepts will bleed over, but I think you're going to start to see more and more state positions open up, because we had a lot of people go into state taxes back in the late 80s and early 90s. State tax tends to be one of those areas where when you go into it, it's hard to transition into a head of tax role. It's much harder to do that than in a federal specialty or international specialty. So a lot of people throughout their career have moved up the ranks within state local, but then they hit a bit of a ceiling where they can't move any further, and they understand that and they're okay with that. So what you've seen over the years is a lot of state tax people find a really good job, and then they're content to stay with that company for 20 plus years or whatever. What's going to start to happen is when we see these boomers start to exit, there's definitely going to be an impact in the state and local specialty. And I think companies that start to get creative and understand that there's more than one area beyond just the Big Four where you can hire really good state and local professionals will get a jump on the market and a jump on the resources in the state area. We think it's one of the next big areas where we're going to see a great amount of increase of hiring. So I don't think everyone is on board right now, Pam, with hiring people right out of the government agencies, but I do think that there's going to be a big opportunity in the coming years to do that. Steph, I don't know if you have any other perspective on that at all.
No, I think you hit it really, really well. I mean, I definitely think that there's going to continue to be a trend in state and local in all areas, indirect and income. So I think that you're right. You're dead on there.
I've got one that's going to be right in the wheelhouse for Becca and Gareth here. What about interim temporary work for more experienced higher level leaders by that was submitted by Brett. Why don't you guys take that one?
Sure, and I think we kind of started to alleviate that a little bit on one of the previous questions, and we've definitely seen an influx in that. These clients like having someone that has a lot of experience, that has been in-house corporate, and the fact that sometimes they can get someone that has maybe 20 plus years of experience being in a corporate in-house environment versus having to rely on someone maybe from public accounting that has only ever been in public accounting and maybe only has kind of 5 to 10 years of experience, but yet they can get it much cheaper as someone that has more seasoned experience is kind of a no-brainer for some of these hiring authorities. So we're definitely seeing an increase in that. I just had a conversation with an individual this week, and he's been at the same company. He's kind of number one, number two, or number one in the company. He's planning on retiring next year, and he's kind of already figuring out, okay, hey, I want to go and consult after this year is out and kind of start going out and helping different companies. And that's a big profile what we're seeing. Companies are bringing these individuals in to help with the transition. People like yourself are able to then do the knowledge transfer. You're able to help develop staff in there. You're not necessarily just coming in looking to get that project done and then kind of go on your way and see what's next. You're actually kind of looking to make an impact in there. So there's definitely a need for these more seasoned, experienced contractors to be out at companies, and we're definitely getting inundated with requests for them.
Just had another question come in from Gary. How open do I need to be to relocation? That's a little bit of a loaded question, Gary. I would have several other questions surrounding that, but I'll take a stab at answering it, and Steph, back me up here if there's anything I miss. I think part of your decision to relocate would be based on where you're based now. If you're in a market that is, a major market with lots of companies that have tax departments, you may not need to relocate. I think the other factor that you have to consider is what area of tax you work in. How in demand is your area of tax? As I mentioned just a minute ago, state and local tax, while we think it's going to be a booming area in the future, I would tell you we don't get as many state and local searches come up as we have transfer pricing searches or international planning searches or things like that. So I would evaluate the area of tax that you work in. I would evaluate, because if you're in an area where there isn't as much demand, you may need to be more open on relocation. If you live in an area where there's not as many companies that are headquartered that would have tax departments, you may need to be open. And then, kind of getting to the point that someone asked earlier about being a more experienced tax professional. If you happen to be someone that's finding it more difficult to get interviews, whether that's because of your age or whatever, then I think just the longer your search goes on, the more you should open up your parameters and start to look at other options so that you can consider them.
Yeah, I was just going to add on to that too, that I do think that a little bit depends on where you are in your career. For example, if you're still young in your career and you're trying to develop and you need to build your skill set in specific areas, you're probably going to want to be much more open to relocate to really find the right opportunity that's going to get you where you want to go. As you get heavier, more experience in your career, and you've been able to really broaden out and get the experience that you want to be able to compete on the jobs that come up in the locations where you want to be. For example, if you're in a smaller location, but that's highly desirable, like a Denver, Colorado, you want to be able to really compete if there's a director of tax or VP of tax or head of planning job that comes up. So sometimes you have to make concessions early in your career to get the experience you need to make yourself more marketable later in your career when there's fewer jobs open.
Good point. Yeah, that's a really good point. We got a question from Kim. Do companies still prefer CPAs over candidates with only industry experience? I'll take a stab at that one. I would say it depends on the company. I have some clients that, want to see someone have a CPA or some kind of advanced degree beyond just the accounting degree. I have some companies where they don't care. They'll, as long as the person has the right skill set, the education or how they got to develop that skill set is less important. So to say that I see one company, prefer one designation over another, I don't think it's fair to say that we see companies lean one way or the other. One thing I have started to see in recent years is companies having a preference for either a CPA or an advanced degree of some sort. Whereas when I first started at the firm about 16 years ago, I think you could get away with just having an accounting degree and not the CPA or something else. So I do think as we've seen it become, we've seen tax get a higher profile and a higher seat at the table. The CFOs, the management teams are expecting a little bit more out of the tax departments, and sometimes that does reflect in degrees and CPAs and things like that. But there are still a number of companies out there that it's not a requirement.
I will just add on to that, though, that if you can get your CPA, do it. Don't wait, because later on, if there is an opportunity that you really want, there's always a chance that someone could beat you out because they have a CPA and you don't. So if you want to make yourself the absolute most marketable and you want to be able to compete on every job that fits your skill set, take the time and do it. It could really help you down the road.
Yeah, that's a good point. A very good point. Let's see. Tom submitted in, are you seeing an increase in demand for sales tax compliance folks given the recent Wayfair case? I have not specifically seen the Wayfair case lead to us getting calls or a huge increase in sales tax compliance, but specifically because of that case, Tom. So I don't necessarily know that the searches that have come up, and we have had a few indirect tax positions come up this year, but those have been more because of retirements and things of that nature. And I think we're going to see a lot more happen at that level. The other thing and April, you might chime in here if you're seeing more indirect tax positions at your level. My perspective, Stephanie's perspective, Natalie and Peggy's perspective is from the executive search side of the fence, and we typically work on the higher level positions, whereas Gareth and April and that team tend to see more the mid-tier and lower level. So if I'm off on my stats, April will certainly chime in there, but I haven't seen a great impact because of Wayfair. Let's see. Oh, go ahead. Were you going to say something?
I think April's having, okay. I think, April, you're having a little bit of audio problem.
Okay, I'm connected now. And my apologies earlier for all the static. I was on the computer audio and not the phone. But no, I have not seen any increase in those lower to mid-tier level indirect tax roles either.
Okay. Yeah, we may just not have started to see the influx of that just yet.
I'll jump in, Adam, just on that bit. I'll tell you where we have is on the contracting side, consulting side. Just state and local, indirect. I think we've seen more on that side than we have pretty much any other position so far this year. I think that's been probably one of the biggest drivers, the state compliance, the indirect tax. They've definitely been big areas on the consulting side this year. So maybe not on the permanent side, but on the consulting side, we've seen some of that for sure.
Oh, that's good.
Well, and I mentioned a little bit earlier, I do think that whole indirect side, including with sales and use, I think kind of taking the lead will be an area that we're going to see some increases in the years to come. So could be because of Wayfair, or it might just be, it's an area that companies want to put more attention into, but we'll see how it shakes out.
I had a question by Gary. Given that people only stay in organizations for 2, 4, or 5 years, why wouldn't you want to hire a qualified older person versus the younger person who's looking to move 2 years from now? I'll take a stab at that, and anybody else certainly chime in here on that one. I don't necessarily know that I would just assume that a younger person is only going to want to stay for 2 years. I do think that you see some of that, but I can tell you I have, certainly at the upper levels of an organization, senior manager, director, VP, if I see people that have too many 2- and 3-year job stints, I can't get them interviews. So I will advise candidates that reach out to me, and if they've had a couple of short stints and they call me and they're starting to look, and there's not a real reason for them, like their company's being bought, or they feel like they're underpaid, or something like that. I mean, I'll actually advise that candidate they need to sit put for a little while and gain some experience and get some stability on their resume. So I don't necessarily know that hiring authorities are viewing candidates as someone that's only going to sit in a job for 2 to 3 years. The other problem that you could have if you're looking at a lower level position and you're more qualified is, coming across like you're going to be willing to do that level of work. There is a perception out there in the market, rightly or wrongly, that the more experienced people had rather direct and oversee versus, be the doers. So I think if you are open to doing that, you need to make sure that whoever is representing you, if it's a firm, or if you have a chance to talk to HR, or if you have a chance to have a public accounting firm present you to a company, that they present you in that light so that there aren't assumptions being made just by paper alone.
Adam, I agree with everything you said as far as, candidates who've had a lot of job moves and the younger candidates. I do think it's a stereotype. I see more candidates at the lighter level sticking around for a while than what may be perceived out there. So I think that that's true. I also think that, more and more companies, someone touched on this earlier. I apologize, I don't remember who, but more and more companies are looking at those heavier candidates and experience and willing to open up their eyes to just bringing them in for, 4, 5, 6 years. So we're really seeing a trend that way. And so it'll be interesting to see if that continues.
We've got about 5 more minutes here for questions. I've got one that just came in from Tom. It says, can you share pricing ranges regarding retained versus contingency search for a 2 to 8 year person versus tax partner, both positions for small firms under 10 headcount? So unfortunately, Tom, when I can speak to what we run up against for our search business when it comes to pricing and things like that, we don't do a ton of 2 to 8 year retained searches, especially in the public accounting arena. We cut our teeth on that many, many years ago. But what I would tell you overall, the difference between retained and contingency search is there isn't that much of a price difference. I think the perception is that retained is so much more expensive than contingency, but contingency may be 4 or 5% cheaper in terms of the total fee. The biggest difference with the retained model versus a contingency model is going to be when you pay your fee, not how much your fee really is. On the retained side of the fence, the fee tends to be paid up front, in a retained basis, which, is kind of self-explanatory, versus the contingency. It's only contingent on the back end. And obviously I work for a retained firm. I believe in the retained model versus the contingency model. So, you are getting a biased opinion here, but I will, from my perspective, I will tell you, I think if you have a high impact search, you have a search that is critical to your organization, having a firm that's retained, the only firm working on it that's working on your behalf, is the best way to go about getting the best candidate. The contingency method works. It's been around forever. A lot of firms make a lot of money doing it, and companies have a lot of success using contingency models. But it is a broker arrangement at the end of the day, and because it's a broker arrangement, that firm isn't necessarily working just for you. They're trying to place that candidate anywhere so that they can get a fee, because they're not guaranteed anything. So I think part of the evaluation, if I'm in a leadership position at a firm, is trying to figure out what's the best way to go to market, how important and impactful is the position, and what firm do I really trust to go out there and work on my behalf? Those are the things I would be asking myself.
Yeah, and just to tag on that too, with a contingency firm, like Adam said, yours may not be the priority. So, for example, I'm working on a position in Boise, Idaho right now. That's a tough location. If you're working with a contingency firm that has 10 searches going on at the same time, they're going to put most of their effort in the one that they can fill the fastest and the quickest. So, it's just, they got to get paid. Whereas with the retained search firm, you're paying them to start working on your search, and they are going to work hard on that search. So there is a big difference in that particular area. So be careful.
Let's see. I think we got time for one or two more. I've got one here. Peggy, I think you should take this one. This deals with kind of your area that you talked about in the webinar. Do you think we will continue to see hiring due to M&A activity and company growth through next year?
Yeah, so we're definitely in a good economic state right now, and we have been for some time. So I think because of that, and with what we have going on in the market with the M&A spinoffs and companies moving their headquarters, we're going to continue to see a good level of hiring until the market shifts, which we all know a shift will happen. It's just a matter of time. We also know there's more. We know more about the effects of tax reform now, which has eased the minds of hiring authorities, allowing them to move forward with positions. So I think that's playing a factor into it as well. But until the market shifts, I definitely think we'll see it. And until I wish I knew when it was going to shift. I could tell everyone, but I don't. But if you guys have anything to add to that, please feel free to.
Yeah, no, I think you hit the major highlights there. As long as we continue to see good economic conditions, I think companies are still going to look to conduct M&A activity. I think they'll still look to grow and spend, and especially as tax continues to get more and more complex because of tax reform and all the NGO involvement and things like that. The demand's going to keep there. If the economic conditions shift on us, as you talked about, then kind of all bets are off, and we'll have to see how companies react. Unlike prior downturns, I think the spotlight being on tax so high now, it will be interesting to see how companies react to that, because you can only cut so much. Let's see, Natalie. There's one here I think would be for your area too. Do you think the trend of hiring authorities perceiving that it is a difficult market will continue, or will it get easier to hire in years to come?
Yeah, and you guys feel free to contribute if you think I'm missing anything in this one. But honestly, I don't see it slowing down anytime soon. That is the only thing that I think is going to have a major impact is likely when we have a pullback in the economy. And that will happen at some point. But until that time, it looks like at this stage, we'll probably be pretty consistent in the market. As I discussed earlier, over the past 5 years, it's remained relatively steady in terms of being a candidate-driven market. And that basically means that right now there's more jobs open than there are people to fill them. If that pendulum swing does occur in terms of a pullback in the economy, that's going to obviously flip. But in the interim, we are seeing a pretty large amount of baby boomers planning on retiring here in upcoming years. That's going to keep that demand going pretty steady, as well as tax reform and new regulations coming on. That's also increasing the complexity and the demand for this high-level talent, especially at those upper mid-manager and above-level positions in these functions as well.
Yeah, good points. Okay, we're running up against the end of time. We had two that just came in. I'm going to address them really quickly here. One is there more opportunities in certain parts of the country than other parts? I would say we have certainly along the coasts where you see bigger pockets, California, where there's a lot of companies headquartered in particularly Silicon Valley and Northern California, also the Northeast and the tri-state area. And then the upper Midwest and the Rust Belt, we see lots of opportunities. I think that's a byproduct of just a lot of companies being based in those areas. So think about where you see lots of companies being based. Houston was down for a little bit. It's starting to come back because of oil and gas as well. Second and last one here, I'm an experienced international tax attorney, LLM, CPA, Fortune 100 experience at the director level. Is my skill set valuable in the consulting arena? Gareth, you want to take that one real quick, 30 seconds?
Sure, 30 seconds, yes. And we actually are just working on a position right now for a client that wants a tax attorney to work on legal opinions and dealing with some of their intercompany agreements and transactions. So, yeah, I had 2 conversations this morning about the need for tax attorneys on the consulting role. So I think there's definitely a need as people realize, just to sum it up, as people realize that, hey, you don't have to go to the big 4 accounting firms or you don't have to go to the big law firms to get the quality help that you need for a fraction of the cost. The increase over the next couple of years is going to be huge for this kind of level of individual.
Wholeheartedly agree. Stephanie, we're going to turn it back over to you to wrap things up.
Yeah, so that concludes our webinar today. If you have additional questions or need any assistance with anything in your tax department or the tax market, anything like that, feel free to email or call myself, Gareth, or Adam. We have our emails right up there, TaxSearch. Our website is taxsearchinc.com. You can get our phone numbers on there. Feel free to just call us anytime. If we can help you, we would be happy to do so. And we really appreciate your time today. We know you're busy, so thank you so much for attending. And we will let you know when our next webinar comes up on our next leadership series. Thank you.